Coming back to you with Full Throttle Traders. Want to kind of give you a daily overview. I like to do this often just to kind of keep us in check where the market is. Now, we're dealing with a lot of news. We're dealing with, tariffs, the tariff pauses, exclusion of China, and it's making the market become very slingshotty. So I told our room members today, I said, look, the market seems to me like it's bullish long, but scalpy bullish long. So don't commit to too much anything because it could come back in tomorrow with a new tariff or a new pause or some increase or reduction to China or specific countries, and the market will gyrate based on that news here. We are in a very specific word type market here, so don't overdo it. Keep your risk a little bit tighter maybe than normal. But I think it's important to kind of know where we are in the grand scheme of things. So let me move over to the charts here. We're going to take a look at the indexes and kind of where they are and where they are likely to go here over the next coming days. Now, keep in mind, you have a holiday week this week with Easter or Passover, Good Friday coming over on Friday, so the markets will be closed. But take a look here as I move over into the channels, and let's kind of idea where we think the markets are going here prior to up until Thursday. All right, back with you. First thing I want to do is look at the ETFs. So this is something you should make a regular part of your practice. Look at the ETFs. You can look at thumbnails. You can see maybe what's relatively weak or relatively strong, and sometimes trade off that, the actual stocks associated with the ETF. But I like to get a general idea of what the ETFs are doing, who's strong, who's weak. One interesting thing that's come to mind today is that if you notice this morning, gold or GDX, right, the gold miners ETF was off by almost 1.5%. And as the market went lower, what I noticed was that gold began to pick back up. Now, normally as the market rallied back here, this is a center screen of the market right here. Let me put that on my sheet. You can see it. This is the red one here, the burgundy color is the actual S&P 500. And you can see as the market came back, so did gold. Now, not all the time, but a lot of time, just like USO, those become inverse indicators, right? Much like the TLT, the bonds against the rates. If you look at TLT, they've been flying higher or lower here. As a result, the 10-year has been flying higher. So these are almost strategically set up to counter one another. Well, much like the gold. So when I saw the market going up and saw gold, the ETF beginning to kind of hold higher prices, and I saw that this morning through NIM, on the gap fill, came back here, gap down the gap fill, and also the ETF. This hasn't done quite as good, but the overall sector in general has done, not too bad. It's actually through gap fill in here. So that's a little bit of divergence in here. So what does that mean here? Well, gold prices are high. This is an indication that the market may continue to go higher. If gold prices go higher and the market goes higher, we are definitely short-term overbought in some of the indices when it comes to metals, precious metals, and things like that. So some sort of a downturn profit taking may fire the market up to continue to be inverse and go back higher. Let's take a look at the SPY and where we are in general. Now, I put in here, this is a very news-driven market. You don't have to be very far from the trading world to understand that, right? One day things are fantastic. The next day we're setting historic records. The next day we're down at the abyss. So it's a very difficult trader. Traders are on eggshells right now. They don't want to commit. They will trade, but there's not a lot of committal in here. Rory Bouncer. This is one of the most dynamic moves that I've seen in a number of years outside of COVID. Of course, those initial days and weeks in COVID. You can see the move down, the gap up, think that, okay, the bottom's over, it's sold off. These are tremendous readings in here, right? $35 moves in the SPY is just unheard of, right? Unheard of. And then the gap down slightly in here. And of course, the news that day when the pause on the tariffs came, and it just skyrocketed higher. We gapped down because I mentioned here that this is too high. It shouldn't stay here. So there'll probably be some profit taking. They actually did that overnight, came back down into about 60% of that bar, closed back up at the upper level of the bar, opened up, and now went higher. Now, the thing I want you to look at here, and if you remember my past video, I talked about the market does not like to be too extended from A, the 20 period moving average on the daily chart or weekly, but I like to use the daily, and or it does not like to be extended too far from the primary trend line. So here's the primary trend line in here. When we were down in here, I said, look, the market is oversold, no doubt. It's a combination of words and we could go lower. However, the market also, the 20 period moving average is right here at the time, and we are far distant from the moving average. So the market's probably going to somehow figure out a way to get back up and marry that position a little bit more. Now, was I expecting this to happen? No, nobody was, right? And then, of course, the continuation here. So the market's done what it's supposed to do. You almost look at this like it's like the mother doesn't like to be too far away from the kids, right? The kids are up here at the moving averages. The kids are at the 20 MA. The mother's down here. Eventually, the mother will come back and they'll marry up again. They'll meet up again. And sometimes it's through a consolidation, more of a bearish. And then what happens just by that, by nature, you'll actually hit that trend line. But usually it happens with some sort of a bounce or some sort of a grind to kind of close the gap where price is and the moving average. It's always important to draw those moving averages, or draw those, not moving averages, but draw trend lines to see where you are. And there's no scientific say, well, I'm this percentage off. Historically, if you're over 8% away from the 20, you are overextended and the market will probably want to move. But I've seen them 12, 15% continuing to go against. So don't lock down too much. That would tell me that I might want to nibble into a position if I want to go kind of swing, scalp long, and then add to raising my stop until I begin to close the gap on this. Remember what this looked like before. If I draw this line back, and remember right in here was the comments I made, and that's what it looked like, right? I said, this market does not like to be far away from that moving average. It doesn't like to be far away from that trend line. And it will do something to kind of figure itself out to get back into that mode. And then what happened the next day? Well, we opened lower, and about midday, most of this bar came in midday beyond, and on volume as well. Now, again, we weren't expecting that, but look what happened. The market did that. No matter how it did it, how it got there, the market will always work back, or at least attempt to work back towards the moving average of the 20 SMA and the primary trend line, as long as it's a valid trend line, not anything that's straight down or straight up sideways. You want something more that 45-degree angle. So no matter how it got there, that's exactly what the market did, and it retained that here as it's now working back up here. The next thing I want to look at here really quickly is where we are in the Bollinger Bands. Again, as I mentioned before, the Bollinger Bands is something I like to look at because when they expand and contract, sometimes this shows us, although it's not consolidating here, when the Bollinger Bands do kind of push down, we know there's going to be some sort of reverse field, magnet field that's going to push these things open, like in here. When they push together, and then boom, they begin to pop open again. And then they close together and they popped open again, right? And so sometimes Bollinger Bands can show us things that you really can't see on the charts, because I didn't see a consolidation in here. Nobody knew that, right? But that tightening of the bands was interesting, and the fact that it was the next tightening mode after this area here. And then, of course, we have the big drawdown. Now, remember, the midpoint by default of the plot line, which is right there, it's the same thing, is the 20-period SMA. So I always want to identify, am I above or below the 20-period moving average when I do this? In this case, we're below. So where do I think the market's going? In the short term, I think it certainly has room to go to the trend line in here, but I think in the short term, it's going to at least take a stab at the 448.75 level. Let's call it the 450 level. So the short term, outside of news, and that's always possible, we're going to see probably the news. Now, another thing that tells me that's probably the case, because where wide range bars ignite and then fail, either an igniting bar higher or an igniting bar lower, that leaves, in this case, it leaves supply behind. So right above this is what, 548.62. Isn't that ironic that was in 13 cents in the moving average? There is a boatload of supply that exists right here. So if the market does make it back to these areas, it will get sold into, but that doesn't mean it's moving lower. It could actually begin to manipulate that, go sideways. The bids are coming in and it's consolidating in here. The supply weakens and the bids do push through. But there will be a reflection. You can mark my words on this, right at that 448, 449, 450 area. unless the market gaps over it, it's going to have to contend with a tremendous amount of supply that will probably, at least initially, pull the market back. And then we'll see what happens that day or the next day. If it consolidates and the bids are in so much demand, it will take out supply. But this is the area that I believe it's going to. But let's take one more step at this, and I'm going to go down to the Qs here and look at tech. If you notice that tech is almost there already, right? And we saw that happening just in the way that tech was behind the market today, then it neutralized and caught up to the broader market here. So the SPY and the Qs were almost identical, at least earlier. You can see we're at supply, but another thing that's important to know, we're also at the midpoint of the Bollingers, right? So again, once we're at these midpoints, and this is the 8, the dotted line, this is the Bollinger midpoint, the 20. And you see the 20 crossing the 50, yellow in here, continuing downtrend in here. But you can see once it came back to the 20, it didn't live there that much before it kind of got back on this side. So you have to look, though, which side of the fence are you on? Are you on the low side of the Bollingers, on the upper side? The upper side means that those could be stopping points. So when you start to see wide range bars that ignite from the 20 period moving average, what you're seeing is usually a pullback into the 20, and that's igniting. That's where the algorithms take place. That's where a lot of professional traders come in and begin to buy in that area. So those are the ones that I might throw a bull put credit spread or maybe even an options play on a pullback if it hasn't went too far, and try to get in on the new 3 to 5 day, 2 to 5 day higher price mode if that's the case. Right now, until we deal with supply, I'm going to be scalping long going into that. IWM is much like the SPY. It did take the downturn here. It's still quite a bit further away from here. Not as much further away from supply, but it's further away from here. This is basically just the Russell 2000. So we got up here to the 20 is around 195.76. We're down quite a bit in there. The diamonds are much like, obviously, the SPY. A lot closer, the Qs, a lot closer here. It actually took out. The Dow's been outperforming here off the bottom. So the diamonds or the Dow is oversupply or dealing with supply right now, and it's closer to the 20 MA. So we'll have to watch these in the coming days. Remember, we have a short week of trading this week, so we do have to kind of bring that into fruition. We are down below the midpoint of the Bollinger Band. We also are dealing with a supply area that's in charge at this point in time. We'll have to see how those things begin to manufacture themselves higher, if possible here. Again, you can kind of see the ETFs here. For some reason, TAN has led the one of the moves up here, one of the higher ETFs. And you can see healthcare, although it has been down a lot today, worked its way back up. And of course, you can see, even since we talked here, gold is maintaining, or the gold miners index is maintaining about 0.75% up in here. USO, KRE, we come on the heels of JPM earnings. A little bit down here lately, but we've been holding this here. You can see even in JPM over here, just kind of off the cuff, you can see where the Bollinger is, the midpoint in here. See how it deals with that? You should have the 20-period moving average SMA on your chart because you can always reference that. You know where that Bollinger is, man. It's from default by using that 20-period moving average. So stocks that ignite from the 8 and or ignite from the 20, ideally both when the prices are above both, there is a better than average chance that prices will continue forward, right? If you're igniting into the 20, there's a chance it will stymie and close below the 20. It did every time here. Close at the 20, below the 20, at the 20, here, below the 20. It ran into the 20, below the 20, below the 20. You can see how powerful they can be. Very often, I like that when they gap above and then pull back to the 20. That's a getting on place right there. If you can find that on a 15-minute or 65-minute chart, that's a place you can buy that new tune and look at these as reference points for targets. So anyway, that's the summary here on April 14th, 2025. I hope that helps. Happy trading. I'll be back at you tomorrow.